Digital currencies are reshaping the investment landscape, and so are we. As the world's first and largest digital currency asset manager, Grayscale is the investment partner of choice for individuals and institutions. Go digital. Go Grayscale.
It's great to be here today. I guess I wanted to just jump right in. Michael, I'd be curious to hear what you think the regulatory landscape broadly is for crypto and what you think it ought to look like.
I don't think we have enough time. Yeah, I think it really depends on whether or not you're talking about domestically or you're looking at other parts of the world, because it's really a patchwork. Depending on where you fall geographically, you may see, stances that are a little bit more accommodative or those that are a little bit more prohibitive. I'd say here in the US, since we're here in the US at the moment, we've seen guidance from the SEC, the CFTC, the IRS, FinCEN, Treasury, the enactment of state licensing and registration for a lot of the businesses providing products and services around crypto. But I'd say as far as that has gotten a lot of the industry and a propensity of investors to be comfortable allocating to the asset class, I'd say even just in the last 2 years, that's been a meaningful change. Some investors maybe wouldn't have invested because there wasn't enough regulatory clarity. We're now at this tipping point where we are at events like this today, where we're devoting a lot of time to this topic. You have investors that are some of the most experienced, followed investors in the world allocating 3-4% of their portfolios to this asset class. It has really arrived and it is really here to stay. And the asset class continues to evolve really, really rapidly. So from a regulator's standpoint, they have a tough job. Crypto still, as much as it's grown, represents a fraction of the other markets in terms of size that they actually oversee and regulate. And so what I'd like to see, what industry participants like Grayscale would like to see, is our regulators actually regulating beyond enforcement. Because what we see today is a lot of enforcement actions being taken against individual companies or individuals themselves who are operating nefarious business practices or defrauding people, et cetera. And examples should be made out of these folks if in fact they are violating securities laws. But we cannot have just a landscape of these landmines that serve as guideposts on how to build a business or offer products and services around crypto. The SEC, I think even just as recently as today, Chairman Gary Gensler was speaking to the Washington Post and said that the SEC has the authority it needs to oversee and regulate crypto. So if that is in fact the case, then we need to see a broader swatch of regulation come out so that there's actual guidance for how these products and services can be offered.
Yeah. Staying on the topic of the SEC and Gary Gensler, he has said that he believes that crypto assets are securities and should be regulated.
I think it's really only once, perhaps in a generation, that a new asset class is born. And I think crypto is certainly going to be the asset class that was born for my generation, this generation of people that are making investment decisions. And, it's such a rarity, but usually when something new comes along, somebody raises their hand and says, I'm going to take this on, I'm going to control this as part of what I oversee, what I regulate. And we haven't seen anyone really do that. The SEC hasn't really said it. CFTC hasn't really said it. IRS. So that maybe calls into question whether or not we need a new SRO to oversee crypto. But to date, where the SEC has actually made commentary is that Bitcoin's not a security, Ethereum is not a security. The CFTC has actually raised their hand and said these are commodities, and that's led to the creation of a derivatives market and Bitcoin futures and Ethereum futures. But beyond that, there isn't enough guidance on a lot of the hundreds, if not thousands, of other currencies and protocols that have been developed besides Bitcoin and Ethereum.
Yeah. And I mean, how do you think it should be dealt with?
Well, I truly think that if the SEC means what they say, which is that they are inviting companies to come in, inviting folks to come in and discuss the issues in front of them, that new frameworks need to be enacted. Because the chairman's commentary suggests that perhaps some of the trading platforms and some of the lending platforms out there may in fact be offering securities and thus are operating in a way that violates US securities laws. And so that type of legislation, that type of coordination would really mean an act of Congress to actually cause there to be a licensing or some kind of framework developed for companies in the space that offer those types of products and services.
Yeah, and we know...
And that's not an overnight process.
No, certainly not. I was going to say we know the limits on acts of Congress. Switching tracks a little bit, I would be curious to hear your thoughts on crypto ETFs. Particularly, I know you have an interest in spot ETFs. A lot of the conversation thus far has been about futures, but would be curious to hear about spot ETFs.
Yeah, so this is super topical, and I'm glad we're going to spend a few minutes on this. You know, the SEC, I think dating back to 2013 is when they received their very first Bitcoin ETF application, has either continued to ask issuers to pull back their filings or has publicly rejected filings, stating things like the fact that the market may be, ripe for manipulation. There might not be surveillance sharing agreements in place. There might not be enough coordination amongst exchanges. Those types of market infrastructure that they'd like to see be there in order to get comfortable with an ETF. And that has continued to be the case, but that has not slowed down the growth or the adoption of crypto. There are tons of ways that investors are accessing Bitcoin and other digital currencies directly. Certainly a product like ours, our flagship fund, GBTC, Grayscale Bitcoin Trust, is $30 billion in it. It's the largest Bitcoin fund in the world, is publicly traded every day. And so there's real demonstrable evidence of investors wanting access to this asset class in the form of a security, the same way that they may use GLD for gold or USO for oil, right? These are access products. And it's been kind of a no kind of a situation with the SEC until a little bit earlier this year. And the chairman gave a speech in Aspen and actually started to talk about looking at having the SEC staff look at applications for Bitcoin futures-based ETFs, with really no mention of spot-based or physically backed ETFs. And as a result of that, they got flooded with applications, tons and tons and tons of them. And it's not just asset managers in the crypto space, but it's also traditional asset managers making their first foray into crypto, making these kinds of filings. And what we've been hearing and kind of advocating on behalf of our investors, which is across all 50 states, and again, tens of billions of dollars invested in this fund, is that the SEC needs to ensure that they're creating a level playing field. That if they're to just approve a Bitcoin futures-based ETF without simultaneously letting a spot-based ETF into the market, we would convert our flagship fund into an ETF, that they stand to harm investors. And they are really kind of forcing investors into what everyone has cited is going to be a product that's going to cost investors a lot more, have a lot more frictions associated with it, and really kind of push investors just in one direction because that's the only product that's going to exist. So investors are looking at ETFs, they want ETFs, and while, again, there's tons of ways to access crypto today, there is no question that there is still a cohort of investors, some of them may even be in this room, who are waiting for the familiarity and for the protection of an ETF wrapper before they're going to get comfortable investing in Bitcoin.
Sure. And on that topic, on investors who might be, slightly timorous, there has been sort of this institutional adoption of crypto. Does it have further to go? What stage or where? Yeah,
sure.
Where are we?
Yeah, I mean, when I just think about how the conversation has evolved, Grayscale, myself, we've been in the space for about 8 years now. And if you were to look back at 2014, 2015, we were maybe talking to just a couple of Silicon Valley family offices. We were not talking to major institutions or hedge funds. That really started to change, I think, primarily in 2017, when Bitcoin really broke out above $20,000. Mm-hmm. And since then, what's been so fascinating is that as we think about what crypto represents, what Bitcoin may represent, Ethereum represents, it's interesting that it doesn't fit into the exact same framework for any one investor, right? They may look at it as a store of value. They may look at it as a new, early stage technology investment. They may look at it as a new payment rail, as a way to move money around the world instantaneously and for free. And regardless of their investment mandate or the history of how they've invested, there's been an analogy, a point of connectivity for them into the crypto ecosystem. And so I'm fortunate to say that Grayscale has received allocations from global macro funds, from deep value funds, from momentum funds. I mean, you name it across the board. People that you wouldn't necessarily think would be pondering a crypto investment have now certainly done so. And I'd also say over the last 24 months, we've really started to see the participation on behalf of pensions and endowments and other institutional investors. But what we're seeing, I think, as crypto has evolved and has become super topical at the moment, is a propensity on the part of investors to diversify, right? There's this staying power that they all have glommed onto of this asset class. It's going to be a part of their portfolios, it's going to be a part of their allocations, but they also recognize that there's a whole asset class here beyond just Bitcoin and Ethereum. And so we've seen the emergence of DeFi, we've seen the emergence of file storage in digital currencies, gaming in digital currencies, all of these new subsets of the digital currency ecosystem. And so investors are very eager, once they've had that first taste of Bitcoin, Ethereum, some of the large cap assets, to really start thinking about some of the other assets that have come along.
Yeah. So you mentioned pension funds, and I'd be curious to hear what you think, whether or not the regulatory landscape makes this a riskier investment for some of these more conservative institutional investors.
I would say if it was, even just 2 years ago, some of them would cite regulatory concerns before they'd make investments. I'd say some of the pensions had often cited that they might have had an allocation to a venture capital fund, in which case that VC may have made investments in crypto businesses or had maybe received digital assets as a distribution from one of the investments they'd made. And that was kind of enough for them to just get that first flavor of it. Mm-hmm. What many pensions and endowments have also started to really share is that it's not simply not enough, right? And they want to marry the exposure that they may have to private businesses being built in this ecosystem with the digital assets themselves.
Yeah, understood. I've not seen any questions from the audience, so I was thinking we could wrap up by talking a little bit about, we've heard today about changes in the traditional 60/40 portfolio. Would be curious to hear what role you think crypto plays in that portfolio, in the new portfolio. Yeah.
I think the 60/40 portfolio is dead.
You heard it here.
And probably it died an even faster death because of the pandemic. You had a lot of people that, unfortunately were out of work. A lot of people that were looking for new sources of income took to the capital markets. And I think the entire structure of the capital markets has fundamentally changed because of how many individuals have gotten involved in trading. That's what gave rise to meme stocks and all the other trends that we've seen over the last 18, 24 months. But when we zoom out and we kind of think about where the 60/40 portfolio came from and where it's going, one of the things that I think my team is very focused on at Grayscale is this idea of generational wealth transfer. And so when we look at what baby boomers are invested in today, how they're allocated, what their propensity is for risk and income and whatever their investment objectives may be. And we think about the fact that over the next 25 years, there's almost $70 trillion, actually more than that, that is going to pass down to baby boomers and down to millennials and younger generations. We're certainly not running around telling people that all of that money is making its way into crypto, but we certainly say that the investment desire, the investment objectives, and the types of investments that resonate with a younger audience is certainly going to change the way that money is allocated today and how it will be allocated going forward. A couple years ago, we had a really creative advertising campaign around gold and encouraging people to drop gold for Bitcoin, right? And that's a narrative that's kind of found its way into a lot of investors' eyes in that they've rotated out of assets like gold and into assets like Bitcoin. So 60/40 is probably going to be a thing of the past, but tough to say what that portfolio allocation looks like going forward, other than to say that we have a high degree of confidence that crypto certainly has a place in portfolios on a go-forward basis.
Got it. Well, thank you so much for your time. It was really nice talking to you. Thank you all for your attention.
Thank you.
Thanks.